5 o'clock somewhere. My wife said if I'm going to do this now, she's going to have a drink, so I just told her to bring me one too. This is Jeff Scott, and welcome to this week's Top Down Review. As I said, the last couple, I'll do these when time allows. Long weekend, sort of, at least for the market. I think I have to work tomorrow, but did have a chance before dinner on Sunday, so I'm going to try and knock this out. I've titled today The Season of Netflix, The Stock, and it is January 15th, and my email, as you can see, is hgsidoc@gmail.com. To steal the words of one of the other moderators I listen to from the Palatuma group, I'm a volunteer. I am not a professional. This is for education purposes only. Anything that recommends in the spirit of education and should not be considered investment advice. I am a doctor, not a broker. Most physicians lose money with their investments. I'm not affiliated with any software vendor or trading company. Tools demonstrated those that I use in my daily trading. I have paid for all the tools, and trading involves risk, and you alone are solely responsible for any investment decisions that you make. I have tried to mix my style between Cancelim, which was the foundation I had, as taught by O'Neill, Improve My Morales and Catcher, Made Electronic and Better by Woodward and Brown, and then really teaching me how to be a trader, adding new signals, high closed dojis, PPS signals, using old things like OBV, a way that was different and better, and author, creator of indicators, great guy, John Person, and I touch it off with my buddy George Lee from Western Canada and Van Tharp, the Position Size and Money Management. I have a lot of programs. Sometimes people laugh. I laugh too. I need TradeStation or Thinkorswim. I find value in both. I use HTSI for almost all my analytics. EdgeRater supports it, and then I use some seasonality in some websites. HighGrowthStock.com is a great tool. It is the tool that is the central aspect of what I do. The person who owns it, George Roberts, is someone who I've become friends with, but I have no financial relationship. I get nothing if you subscribe, but I like to support them because I support products that I use, because that's how you get continued improvement and development when people actually use them. And if you go under investment strategies, you'll see my name and Ron Brown. Both of us have a lot of videos to help you. If you hit up here, there's a 30-day trial. It's actually free without requiring a credit card, which is novel, maybe not smart, but novel in this era. So you can give it a try. Keep in mind the learning curve is pretty steep. The power is immense. And, you know, if there's some videos that I can share with you, I call them my six-pack, that I can send you a link. If you test out the program and you have questions, just email me at my email address. Again, I am totally independent, but I guess you could say I'm a friend of the family. Now, markets are cyclical. Who would have known that we'd had this entire leg down on the night of the election, and by the time the election was over, in the morning we were ready to go back up again. We've had a hell of a run into year end, stubbled around for a few days, and now at least the NASDAQ, both the overall, the NASDAQ 100 are out to new highs. I'll show you that my canaries are out to new highs. So the question is, do we continue the run up? That's what it feels like, but that's not to say we're not climbing a wall of worry and risk isn't going. You need to know where you are in the market. I increased my longs last week. It was funny, a year ago I was at the JP Morgan Healthcare Conference. Healthcare was getting hammered, the markets were rolling over, and I was taking it in the shorts. Unfortunately, I wasn't short stock, but I was getting hurt. This year I was at the JP Morgan, the whole attitude was different, I guess. No Hillary tweets this time, and no Martin Scarelli saying stupid things. And this market feels much different this year. So I've been on the long side. I have very little protection right now, which is a bad thing to say because maybe the market will drop because of that. But I have been very long, and it's been a very interesting couple weeks of this year. Friday sector review. This knocks out all the major sectors. You could see where's the strength. Financials are strong. Now, the financials had a big run up. They went sideways. Are they ready to break out after being in flags or high bases? It might be time for financials. Energy was kind of weak, as were materials. Home builders were mixed. You know, there's a lot of strength in biotech, healthcare services. Mixture and Transports Financial Media. If I had one of the Canaries, you would see that perhaps the greatest strength in the market was in the Canaries. In fact, let me open something up here. Sorry about that. I've got things going on in the background, so I only use this computer to do videos. To be honest, it's a pain in the ass, but if I use the resolution in my other computers, you wouldn't see anything. I want to show the GPA. Okay. This is the performance of the market. So I take a bunch of user groups. Yes, somewhere in here are my current holdings. Some are the my filtered buys, which are the ones that I typically play. And I don't really care about end-of-year sales from Genesis. Let's see if I can get that back. Hold on one second. The Canaries here, the IBD 50 HGS 100. So one thing you'll notice is there's a lot more black than red. So overall, the market was up for the week. Now, what's interesting, golly, Gucci, is if I come down here, I find the S&P 500 was actually flat on the week, down a few pennies, at least on this technique. There were some of the stocks that were moving the prior week with big volume, Sprinters, Woodward and Brown leaders. Some of the leaders were actually were down this week. Well, it was interesting, the types of stocks that we trade, the best of Woodward and Brown, my GIF All-Stars, pullbacks to the 50, PSA reversals to the upside. These lists were overwhelmingly positive. As I said, the Canaries were strong. They were up 8 out of 8. Stocks were up in the Canaries for a 1.68%. It was a good week. I'm not complaining. As I said, it's been a very cool first couple weeks of the year from a return. Interestingly, IBD 50 and HGS 100 about 1.5% up. Compare that to the S&P 500. High growth stocks were in demand. All right, back to the story. Major markets. I'll look at first at my TOS view, E-minis, NASDAQs, YMs. Down here are the Russell futures, the VIX, and the dollar. So what do I see on the daily? I see kind of flattening on the E-minis, the YMs, which is the Dow futures, even the Russell. Oh, I did get some wine from my wife. Thank you, darling. While at the same time, the NASDAQ futures, NASDAQ 100, led by the Canaries, setting an all-time high. I'll mention later the VIX is getting to an interesting level. You can see the VIX here. It continues to come back down on the daily. See how weak OBV is. And the dollar came down and is sitting on the 50-day moving average. It'll be interesting to see. If the dollar comes down, that should be good for stocks. On the weekly, I guess the important thing is to show you that everything's in a buy mode until you get down to the VIX and the dollar. So strong markets. Now this is a different view. This is looking at Genesis. First column are the E-minis. The second column are the NASDAQ futures. Third column is the Russell futures. Fourth column is NYSE. I do not know what this spike is there. It's persistent, I'll tell you that. And this column here is the IWMs. These are the YMs, I'm sorry. So you got Dow futures, NYSE, Russell futures, NASDAQ futures, and E-minis. Again, where is the weakness in this market? Well, the NYSE is on a weekly sell. The Dow is on a daily sell. Everything else here is on a buy. And again, the strength on the daily on the top, middle is weekly, bottom is monthly. You can see the strength on the NASDAQ stocks. Hello, one more time. Sorry about that again. Rates stabilized. You could see that both the 10-year, the 30-year have kind of the same pattern. They both pulled up, they pulled back. If you could actually read the numbers, you'd see the actual number on the long-term bond is higher than on the short-term bond, which is the way it's supposed to be. AD lines on both the smaller stocks and the larger stocks are at highs, so there is breadth in this market. Number of stocks above the 200-day moving average, number of stocks above the 40-day moving average are both in upper parts of the range but not extended. For those that are new to me, I go through the same analysis of these internals on a weekly basis. Frankly, they only mean something to me at extremes. For example, this is something called the 3-month new high, new low, and it looks at the ratio of 3-month new highs versus the number of 3-month new lows. And it's been very good that when the market peaks, or this new high, new low, within a couple of weeks, the market usually turns down. And there's a level up here where it always reverses from, and a level where it bounces. So I always look at where we are. We're much closer to the top than the bottom, but we're not by any means at an extreme. Now, the daily and the weekly McClellan are somewhat bothersome. The index continues to go higher. I could put the NYSE here. I put the S&P. Yet the McClellan oscillator and the submission index, not only are they negative, they are having divergence from price. This would suggest that there are some weakening breadth on the underlyings. So that might be the only chink in the armor, except for the Dow, that suggests that the market may not be as strong as I think. You want to see a picture of sentiment neutrality. These are the buckets. We take the S&P 1500 stocks, we put them into their Bollinger Bands, and we see how many are above, how many below, and where they fall from 0 to 100 within. As you could see, half the stocks are above the midline, half are below. That is neutral. If you look at where, we call these the buckets, this is the bucket below, the bucket above, and then we take the 100% of the Bollinger Bands and divide it into 10 sections, and you could see it's kind of like a mirror image, so very neutral on the buckets. Of interest, we did see a Hindi in December. The Hindi is when I see a series of Hindis, I know that it's time to change my position in the market and start to protect. Almost every major fall in the last 50 years has been preceded by a couple of Hindis. Sometimes I wonder if Hindis are valid anymore, as the NYSE has become filled with interest-sensitive and energy stocks, and does it still have the same predictability? I don't know that. I continue to watch. I do look at the, the Russell 3000 as an alternative. What's interesting is there are very few new lows now on both the NYSE and the Russell 3000, hence no evidence of a Hindenburg. If I take a look at the Woody indicator, remember we look at this third set of colors. Green is bullish, red is bearish. We are in a neutral zone here, the Woody indicator. There is some strength, and the weakness is in the Dow. If we look at sectors the same way, we have weakness in the XLP, XLE, and XLU. Strength, I believe that's healthcare. And again, I called out the strength in the market with the JP Morgan conference, and then the rest is neutral. By the way, this analysis that I've been showing you used to take hours and require some expertise in Excel macros. EdgeRater makes it 2 minutes to run the analysis. Here are my canaries. This is something we learned from Ian years ago, and he said, take a look at the leaders of the market, and when the leaders crack, then that tells you to get concerned. He also pointed out that these were some of the strongest stocks, and we might want to track these over time. And we pulled back to the 50 a couple weeks ago, and we've taken off to new highs. So these are who I use as my canaries, substituting Baidu for LinkedIn, which was acquired. It is to me, a very positive sign, especially since I own several of the canaries, that the canaries are at an all-time high. You need to know your news on the left and your earnings dates on the right. I call this the season of Netflix. I will hit myself in the head if I forget to talk about Netflix seasonality, but this will be an interesting Wednesday because Netflix, I believe, comes in after hours, so you have 2 days to trade Netflix in preparation for earnings, and that has historically been a whopper. Now, the problem is the options know that, and boy, the options are expensive. As I say here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. My thoughts: markets climbing a wall of worry. Trump tweets lead to individual stock impact. The Trump press conference did little to satisfy public need to understand policy. It's still a bunch of one-liners. Obamacare is being dismantled with no clear plan of replacement. It's a little bit nerve-wracking to me because I recognize that things like the pre-existing illnesses, coverage of kids, the portability, these are things that were great insurance reform, and that if we leave out, if we leave in guaranteed insurability, then healthy people don't need to get insurance because they can buy insurance when they get sick, and the system will be in trouble. So I hope that they come up with a plan that answers some of those issues, and then allow the Trump appointees, who are interesting, I guess we should like him if we're businessmen, are struggling through hearings, markets near all-time highs as canaries break out, VIX approaching a historic zone, I'll show you that, and we wait for both the inaugural and the official kickoff of the first quarter earnings season. Last week or 2 weeks ago, I showed you this, and I showed you how it was a season to forget for growth stock investors. And this is taking all the stocks in the market, looking at their fundamentals on the first day of the year of 2016, and looking at performance based upon those beginning of the year fundamentals. And it was an interesting year because the worst performing stocks, the low EPS and relative strength rank, and those that were distributing outperformed on the year. Hence, it was a tough year for growth investors. You can't really differentiate much here. I would say ERG flat, but a hint that EPS and relative strength matters again, and my turnaround stocks leading box 7. So I like to track this on a weekly basis, sometimes daily, to get an understanding of what's working and what's not working in the market. Typical agenda, and again, the seasonality of Netflix will be something that I definitely want to get done. Let's go on to the chart. So before I do that, I'm going to stop it and get Netflix ready. All right, I'm back. I got that set up. So let's go into TradeStation, take a look at what the market's doing. As you've been here before, you know I look at a combination of different things on my daily basis. So let's go in and look at the indexes. There's nothing trading today. No shocker because it's Sunday. It's not 6 yet, and we have a holiday tomorrow. Although I think probably things will trade internationally tonight. Let's look at the E-minis. As you could see, they're in a buy signal, green arrow, on daily, weekly, and monthly. The price bar is green. That's bullish. It's an elder indicator. When it's green, I can go long or hold. When it's red, I can go short or hold. When it's blue, I can do whatever I want. I shouldn't be going long when it's green, and I shouldn't be going short when it's green, nor long when it's red. Down here are my daily, weekly, and monthly bongos. They're green. You notice up here we've got these red dots on the weekly. That's suggesting some MACD divergence. That's something that may go on for weeks, but usually precedes falling. You notice the weekly is blue as well. We're within the auto envelope, although we're near the top on the weekly. Our high jump is only 77%. So this looks bullish, and it looks like it wants to go higher. If I look at the Dow futures on YMs, sideways, still green. Notice the daily bond goes red, so that's a little weaker. And I mentioned before Dow was the weakest. We're blue here with MACD divergence, but we're in buy signals throughout. And so this one's a little bit weaker. Let's look at the NASDAQ. Up at the top of the auto envelope with MACD divergence on both the daily and the weekly. But this can go on for weeks at a time, but it is a crack. We're also at 96% on the high jump, so once we would think that we are going to need a pullback or at least time to digest. And let's take a look at the Russell. New buy came in on Friday, MACD divergence on the weekly, 65% on the high jump, and still on a bongo sell on the daily. All right, let's look at the dollar. Dollar's weak. It's in a sell signal in red, and you can see it's a sell signal on the weekly. So maybe we will see additional weakness in the dollar. And let me add one here, insert blank row. Let's see if we can get this. At VX. Nope, 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 nope. Not going to give it to me. Do I have it up here? Let's look at the regular VIX, not the VIX futures. And you can see the VIX is in sell mode. Now you notice there's bullish convergence on the VIX, again, suggesting that we might be at a place we bounce. If you go back since, we can go even more, but look at where we are at 11.23. We are kind of where the low on the end of the year was 10.93. We're currently at 11.23. We are in a range that it doesn't get much lower. So one wouldn't be surprised, at least in my mind, to see some volatility coming into the market and some least consolidation of the gains we've had. With the dollar weak, one might expect gold to have popped, and gold has been in a buy signal since right after Christmas on both the daily and the weekly. And one might have also expected silver, which I don't have here, we'll look at later. So that gives me an idea of the strength in the market. And then I might look at my sectors. Healthcare, XLV, actually it's in a person sell signal on the daily, buy on the weekly. It's a blue. Financials in a sell signal, but a green bar. Discretionary, strong in a buy. I know that Amazon is part of this group. Technology, also in a buy, but with some MACD divergence. Industrials, whoops, flat, but in a buy, weekly in a sell. Staples have been weak, and you can see they're in a sell signal. Materials also been weak, although in a buy signal sideways, weekly sell. Utilities, sell signal, and energy has been in a sell signal since the early part of December and on the weekly as well. So that just gives me a sense of what's working, what's not working. Then I go into HGSI. Let's open up my warehouse view. Go down to Woodward and Brown groups, full, major markets plus. And let's rank them by the top-down view, which is just price and volume, looking to see where the momentum is. Rank them by combo rank. I can see mid-caps, gold, Dow, NASDAQ up top. On the bottom, dollar and volatility. You know the market's doing well when the dollar and volatility is at the bottom. Interestingly, NASDAQ Biotech relatively flat, despite my healthcare comments. I think it's a story of winners and losers. Obviously, some in neutral, not everybody going in the same direction. All right, so let's open up the S&P 500 and let's take a look at it. So it's not a very busy view, but there's a lot of things here. And actually, it's some of my prior comments were here from the beginning of the year. So up top are my bongos. These are my primary buy and sell signals, specifically the weekly bongo. I will be interested in being long when the weekly bongo turns green, and being out of the market when the weekly bongo is red. It will get me out a little late and keep me out a little long, but it will keep me away from most of the big drops in the market. So on the S&P, we're in a buy. You can see we had a couple of Hindenburgs show up end of November and early December or beginning of December, but nothing since. I use candlesticks, as you could see. The purple or magenta is an 8-day exponential. The green is a 17-day simple. The blue is a 50-day simple. And the red is a 200-day simple. What I said back here in the beginning of the year is I said we pulled back some. And the question was, would we pull back to the 50 and bounce, or would we bounce right away? And we actually bounced right away. So let's kill that drawing. Let's kill all my drawings right now. And you could see we're above the moving averages, and we look like we want to go higher. On the Dow, this was the one that we called out as being weaker. So it's down here, and you could see red candles, not horribly weak, but the Dow is going sideways. We said the NASDAQ was breaking out to new highs. Let's look first at the overall NASDAQ composite. As you could see, it's running right up this line that we drew ages ago, but it's at new highs. If I look at the NASDAQ 100, which looks just like the NASDAQ, that's nice to see. And then the small stocks, the Russell 2000, have been looking weak and had a nice up day on Friday with a kahuna. So, didn't really learn a whole lot new there from the last review. And let's take a look at the dollar very quickly. Dollar has pulled back to what might be normal support here at the 50-day moving average. And we'll be looking for a potential bounce. The volatility index, as I mentioned, is quite low as it's been in months. It's a place where we expect a bounce. When the VIX bounces, your portfolio falls. So something to watch. It spikes up, and then the time to buy is when it's spiking down. Gold, as we said, had a bit of a move because of the weakness in the dollar. Got above the 50 and retested. This might be an interesting start to nibbling. You're still going to have to get through that 200, and it's all about the dollar, I'm afraid. And silver, not quite as good, sitting right underneath that 50-day moving average. The next thing I'd like to look at is see where the strength in the market is. So we go down to 0.7, and you could see we got 173 groups. And if I look at the ones with momentum to the upside, this is what we find. I'll be honest, I don't understand the second one. So the first one, exploration and production. If I right-click, change to industry group, you notice only one thing is above the average. I usually don't have no interest in buying below the average. So this Sanchez Energy, which had a gigantic move on Friday. So I've now added Force Index, High Jump, Bible Gap Up, Squeeze, Mobo, and Kahunas on the bottom, and Pocket Pivots up here. Big Bible Gap Up on Friday. This pulled the whole industry group up. Doesn't make any money. I'd have to do research before I touch it. This has been the interesting one. Resolute Energy, what a great move, great earnings per share growth. This is a company that, if you look at the fundamentals, has lost a lot of money and is a turnaround. I wonder how much of it's coal, not oil. Oil and gas properties. This one's moving and continues to move, went sideways into this weekend. I don't usually chase much below the index. Marine shipping, these are not great charts. Again, here's a big move, pulling up everything, as you could see. This was kind of funny in November, where these things went from nothing up to 20s and 30s. And big pop on Friday with a kahuna. Everything is green. Mobile breakout. I don't really know anything about this company. I'm certainly not going to recommend it. Losing $1 in September. Don't know enough to say anything. Now I might right-click on it. More info from Webb. Let's look at FinViz if it says it's an acquisition target. Private placement, conversion of loans. So they had a big investment. That's what caused it to pop. Let's look at dry ships, what this did. I tried to short this stock when it was moving, and I couldn't get any stock to short. But look at this. What a move. From basically nothing to 100 in like 3 days. Those don't ever end well. Ever end well. The rest are all below the index. Here's Golar LNG. This is kind of a nice pattern, pull back, kind of a shallow saucer pattern. Had a pocket pivot on Friday. Everything is green. That one looks interesting. The fundies are not great. Third one down is base metals. Aluminums were strong this week. So let's take a look at a couple of these. This is Century Aluminum breaking out, as you will see. No, there's not a delay. I've already looked. Pull back to the 50. If people know I like to buy when it moves up off the 50 with the Kahuna. This was a Bible gap up mobile breakout from a squeeze with the Kahuna, and doesn't yet make money. Century Aluminum. Cameco as a uranium stock also broke out. All right. Semiconductor devices. This one had earnings come out or released some earnings. This is AAOI. On Thursday, it had a Bible gap up from mobile breakout and a squeeze. Pulled back some on Friday. I might set a buy stop above Monday's open and take this stock. It's got great earnings per share growth. Why don't I just buy it at the open? Because it may come right back to that 50-day moving average. But this is one I'm looking at. Here's Qualcomm. Pull back to the 50. Had momentum come in Friday. Don't like the weekly bongo in a sell, but I'm watching this one closely. Broadcom, I am in. I think it wants to go. Mobile breakup from a squeeze on Friday. Qorvo, I'm also in. Nice base, broke out with a pocket pivot on Friday. Everything is green. Maxim also looks like it's broke out. Let's see. New closing highs, at least recent closing highs for Maxim. Let's look over weekly. Multi-year new closing highs. So semiconductors, lots of good-looking stocks in there. Precious metal mining, we talked about gold being up, all below the index. That should be bothersome. I like CDE. It's sitting right on a squeeze. Well, it should be a squeeze. All the moving averages are in the same place, but right on the top of the 8-day. Weekly bongo still red. I'm not going to touch it yet, but I like the earnings per share coming in. This is one that looks interesting. They don't look as good after that. Well below the 250, the 20 moving average. First Majestic. Here's AU, Silver Wheaton, AEM. I'd like to see them get above the 200 because that might turn out to be resistance, and they all have weekly bongo sells. So not a great looking group. Biotech. As I said, this is a combination of some big winners and probably a lot of things that aren't doing it. Ariad is a recently announced takeout candidate. I wish I had some. I was out of it. I've been in it in the past. It went from less than 14 to 24 in a single day, being acquired by Takeda, a Japanese company. Now, should we have seen that? Yes, I am hitting myself in the head. What should I have seen? I should have seen that we had two kahunas before the takeout. We had pocket pivots on 2 days. And on the 4th, we saw a mobile breakout from the squeeze. Now, the bongo weekly was red, and that might have been enough to keep me out. But if I was watching it on Friday that week, the 6th, it closed in the green on the bongo. There was a strong buy signal here, and I missed it. It got taken out at a big premium. Clovis, the next one to be taken out in some people's minds. Everything is green. Big up move starting to get extended. Speaking of extended, Tesaro, but what a great stock, just moving off the 50. I like buying this when it hits the 50. It's starting to move up. Keep in mind that they had a sort of a denial, I believe on Thursday morning, announced on one of their drugs that's on the market. They have to do answer some questions about manufacturing, I believe. But the stock traded up despite having a CRL. It just shows that they don't care about that drug. This is all about their upcoming ovarian cancer drug. What a pattern. And yes, it was expensive here in June. It was expensive in September. It just keeps getting more expensive. Buy them off support. This is a little bit off support. Array, another one, looks exactly the same. Don't know what they do, but certainly a nice extended pattern. Sarepta, this is one that had first approval ever for muscular dystrophy. Pull back to support. Looks like it wants to go higher. I've seen some $60 price targets. So biotech looks interesting. Internet media, Facebook. God, I thought this thing stopped moving, and it's all of a sudden Facebook's on fire. Look at the series of kahunas that came in on this pullback, and I would have gotten back in here. I had a existing long position. I covered my puts that were protecting, and this stock is moving up nicely to Not quite all two-time new highs. It has a ways to go. It's got good earnings per share growth. It's got great earnings. Earnings are February 1st. Pandora earnings, I think, came out. A big gap up on Friday with a kahuna and a pocket pivot. Earnings are negative. Weibo, this is another one that's moving. Big early mover. Pull back, now broke above the 50 with a pocket pivot. I am long Weibo. I'd like to see that weekly bongo turn green. Google breaking out. All right. Infrastructure software, things like Checkpoint, Palo Alto. Very quickly, we'll go through a couple. Checkpoint breaking out. This is one that pulled back. Look at the number of pocket pivots almost every day. OBV taken out. Everything is green. You got to love Checkpoint. Palo Alto struggling to get back above this 200. Symantec, after a long sideways area, is broken out. Turned green up here. Pocket pivots. That's probably buyable. FireEye had some upgrades. Everybody keeps talking about it being taken out. The price keeps dropping. It did have a kahuna and a pocket pivot and break above the 50. The one that, see, Pegasus, I don't know, but what a chart. Again, I would have waited to the 50 and I missed it, but 3 kahunas in a row should have given us a clue, a pocket pivot, everything's green. And that second kahuna occurred with a mobile breakup from a squeeze and a PSAR reversal. It would have been a buy at the open if I wasn't at JP Morgan and busy with other things. Next group down is banks. These are regional banks, and I like regional financial. They all are doing the same thing, which is a big run up and sideways, but look at the banks. That's a credit card. That's a bank, down 9 cents. Insurance. Financials are working. Banks have gone sideways. Friday, it had a mobile breakout from a squeeze, a pocket pivot in kahuna. I think regional finance goes higher. They all look like that. You can just buy the ETF, which looks the same, which is KRE. It did have a pocket pivot and a kahuna on Friday as well. And telecom carriers, they pay a nice dividend. Some of them at least. Here's AT&T. Our straight path does not pay a dividend, kind of a junky looking chart, although it did gap out. This is a Russian. I liked it until I saw that it was Russian. I don't really trust it. Everything is green. Couple of kahunas, volume increasing, pays a 6.3% dividend. Mobile Telesystems. Vonage, nice gradual increase, no dividend. And then we get the dividend payers. AT&T has pulled back to 200, pays 4.8%. And then the other one, not Sprint, I want CenturyTel. CenturyLink also pulled back deep, kind of a flag here after a move up, and it pays an 8.6% dividend. For completeness sake, let's look at the diversified banks. These start to have earnings come out this past week. JPM was the only one with a clean beat. Here's Wells Fargo, pull up, pull back, kahuna pocket pivot on Friday. Next earnings, not to April, earnings are out. Bank of America, even a more pretty pattern sideways despite mixed earnings. Great earnings coming into the stock, pays a small dividend. It's going to go higher, as will JP Morgan, the same pattern. So a lot to like there. I know a lot of people own the Canaries, so let's talk about the Canaries, and then let's go look at some seasonality of them. So because so many people ask me about these all the time, I'll just take a look at each one. This is Facebook, we already mentioned, looks extremely strong. Weekly bongo's going green. This is a buy, and I think it goes higher. Tesla Motors, you look at Tesla on a weekly. Tesla has been pulling back for a long time and has moved off of support. Let's go back to the daily. It's moving, had a pocket pivot and a mobile breakout. Everything is green, does not make money. Netflix, we're going to talk more. Netflix is in a great move. It had a nice orderly flag here, pullback pennant, and broke above it on Friday. Mobile breakout from a squeeze and a kahuna. I think people know the earnings trade. It'll be interesting to see. It does have earnings per share growth coming into the stock, and earnings are Wednesday. Amazon, let's look at the weekly. This thing was about 830 or so, 840 when last earnings came out. Unfortunately, I owned it and I wrote it down a little bit, which I've done a few times and been rewarded. I actually sold half and then bought more. So I've got still have a pretty good position. That's the weekly. Let's go back to the daily. And Amazon looks great. Everything is green. Multiple pocket pivots. Had a kahuna here as it broke above the 50, which would have been a clear-cut buy sign about 35, 40 points away from here. Earnings per share slowing, but still quite good. Notice their multiple is no longer 600. If Bezos misses earnings this time, then we're going to see this again. So I've got to be careful. I'll probably put some protection on and maybe sell off some of my calls, maybe sell some at-the-money calls on it to make some extra money. Price line sideways, but above the 50 and green on the bongo. Google, likewise. So this is an interesting marketplace, a lot of strength there. Now let's take a look at Netflix. Actually, let me show you something else. One of the things that John Person likes to talk about is the Commitment of Traders report. And this is something that looks at commodity trading, and it looks at the professional speculators, the hedge funds, the commercials that might be people that are buying puts or calls to protect a position. And then you have the non-professional speculators, us. What would be a commercial? Let's say that I own corn fields. I might, and I'm concerned that I'm not going to have a good crop. Well, I might buy a put on corn if I think that the prices are going to go down. I might be a call option if I think the prices are going to go up. I might look at fertilizer and do some hedges on fertilizer, natural gas. But let's look at the market. So this is the E-minis. First thing I want to point out is this was back in 07, 08. The market is falling. Above the line is positive. You notice that you have yellow people buying it all the way down. Well, where are the yellow? Notice you were short the blue, which was the professionals, all the way down. And they got in a little early, but they started going long at the end of 2008. And then I don't spend much time with the commercials because they have a different reason for doing their hedging. So now, let's take a look at where we are now. I think it's very interesting. Notice that the professional speculators have gone positive. We've now gone negative. Might be a sign the market's going to go higher. Let's take a look at Netflix in my screener. I think Netflix looks very good and potentially even buyable. Oh, that's just why I bought it last week. The time to bought Netflix was on when it took out the high of this day, and you could have drawn a line here. I've been in it back through here, I believe. Netflix has a new buy signal on the daily person. All three of the bongos are green. It had a Mobo breakout. It's green on the PSAR. It had a forced kahuna on Friday. Again, all the bongos are green. PPS is positive on daily, weekly, and monthly. OBV is strong as well. I think this chart looks great. Now here's the excitement of Netflix. Imagine if you could take a chart and you could overlay 10, 15, 20 years worth of data. And you could then come up with an estimate based upon 5 years in green or 10 years in yellow of what you think the stock market is going to do. So this is Netflix. Anybody notice we're in a nice tight channel? And this here, this is using Seasonality Trader. I've looked at set earnings to January 18th, and I've looked at price performance around first quarter earnings. So if we go back and we look at the years, go back 10 years, 2007, In white, you'll notice over there what the market does. Little bit of a move up, not much. 2008, bad market. Again, a nice move up coming into the market after earnings. 2009, a nice up move after earnings. Again, I'm looking over here at the white line that pops up. 2010, big up move after earnings. 2011, likewise. 2012. 2012 did not work. That was a negative year. Whoops. What did I do? 2013. Notice that white line that went up. 2013 was a huge year for Netflix. 2014, a good year. 2015, a sideways year, although it did go up. And then 2016, which was the one did not perform year. Depending on when you did the date, that doesn't look that bad. If I look at seasonality tied to this earnings date, and if I buy the stock on January 16th, which since you can't buy the 16th would be for 17th, and if I held the stock to February 24th every year, I would have been up 9 out of 10 times. My average up year would have been 31.4%. The 1 year I was down, I would have lost 1%. So seasonality looks at repeated changes in the market where a stock or a future or commodity behaves the same way year over year over year. This is one of my favorite seasonality trades. Because of that, I took a Netflix trade. And what I did, and I did this trade last week on the 11th. Okay, this is just one of three, so I'm going to walk you through what I did. So on the 11th, I decided that knowing Netflix seasonality, that I want to be in Netflix. So I looked at this day and I said, you know, we've pulled back. It's kind of looked like a spinning top. I'm going to go long Netflix right now because I know the seasonality. Now, I looked at all kinds of trades that I could have done. Now, I'm going to stop this and try and show you something. Okay, I'm back. So as you can see, what I did is a synthetic where I bought a 130 call and sold a 130 put at the same time. That trade, since the stock has moved in my favor, and let's see what the stock was doing if I can see that. Hold on a second. I paid $7.97 and now it's $9.90. So I made $2 or $6,000 just about on that trade. I sold a put and that has fallen from, I think it was $10 when I did it, frankly, down to $6, and I'm up $7,000 on the put. Now the problem with that is I've got unlimited risk. So I bought a put at 120, which protects me and limits my downside. Now that one, because the stock has gone up, has dropped in value 4,200. So what I've essentially done is I've paid for a long call with a bull put spread, buying a 130, selling a 130 put and buying a 120 put. Now, what does that mean? It means that we are sitting right now. Now, I'd have to fix the date here of when I actually did this. So I bought it, we said on the 11th. And I could adjust the price, but it'll take too long. But basically, what I'm doing is I'm thinking that based upon my seasonality chart, a 31%. Let's just say we get a 15% move in Netflix. Let's just say. So let's go back to my option chart. 15% from 133 will take us up to about 140. So if we get up to 140, what happens? So at 140, I am going to make, this call will be worth $10 a share, $10 a call. Let's make our position the right size, and that'll give me the real number. So I did 30, 30, and 30. Now I'm hit OK. So if at 140, I will make $18,000 profit. If it goes up to 20%, which would be 26, which will get me then to 160, which I highly doubt is going to happen. I'm going to make 50,000 or more. So I've bought a instrument that will be just like the stock, where I have maximum profits are unlimited. However, I bought a put down here, so the most I can lose on the trade, well, 3 would be 10 times 30, which is, or 10 points times 3,000 is 30,000, plus the 20,000 I paid to get into the trade. So I'm banking that the stock goes up. I'll tell you what I'm going to do. I am going to probably on Tuesday take off the bull put and put those profits in my pocket and let the market run. I'm up a little bit. I think this trade is going to work out. It's a high risk trade, but it's no different than buying 3,000 shares. Now, who can go out on a $130 stock and buy 3,000 shares? That's almost $400,000. But for $20,000, I bought the upside of 3,000 shares and limited my downside to just 10 points. I'll take off that downside risk probably before earnings come out and ride my long-term call. And that's how I play Netflix. There are many different ways you could do it. For example, my buddy George Lee would probably be looking at calls that are out of the money. So a call gives you the upside of the stock, and the only downside is the cost of the call. The problem is the stock's going to have to move to 142.50 for me if I buy a call at the money on Tuesday. So a lot of people might say, rather than buy a call at the money, I'm going to buy a call that's at 150. My risk is less, so my break-even is $152 per 100 shares. I'm only risking $1.50 here. My maximum risk rate is $238 per share, $238. I need to get to $152 for me to break even. I like my trade better. My trade, I break even at a much lower amount, but I am risking more money. Different ways to play on a much smaller investment, $2.38 or $238 for 100 shares. If the stock gets to 150, I'll make you would make $600 or 3-to-1 return almost. So there's different ways to play. This isn't about options. I just wanted to show you, but I put my money where my mouth is, and I took that trade. I got a lot of positions. The other thing that I think is interesting right now is steel. I don't know what steel's going to do, but let's just look at steel. This one's got earnings this week. And you know what? It's not going to show well here because my resolution. Let's just go here and let's type in steel. Steel Dynamics, STLD. And there's some very strong similarities between this, Nucor, U.S. Steel, and others. I'll show you. Huge run-ups post-election. They've all pulled back to this 50-day moving average. Great earnings per share growth coming in. Pays a dividend. Earnings here is 124. I haven't looked at seasonality on steel. Let's look at it very quickly. The good seasonality on steel comes into March. From January 12th to March 6th, it's 50-50, so I don't pay attention to that. What about Nucor? Again, seasonality comes in around March, 50-50 until then, not a big help or hurt. U.S. Steel, seasonality comes back in March, 8-2, 29% average. So are these stocks going to bounce off their 50s and go out to new high, or are they going to break down? I look at the earnings per share growth. I look at the comments coming out of Trump on building infrastructure. I'm long steel, but I'm going to be watching to see what they do at the 50. Here's U.S. Steel. Here's Nucor. What a great place to bounce, but we'll see. Notice the weekly bond goes green. The weekly bongo is green. Weekly bond goes green. I think steel's in a pullback, and we'll have another leg up. If this is the pull, this is the flag, then we could have another 15, 18 points in this steel getting up to 50 plus. So something to watch. So I hope you guys got something out of this. I'll put my buy watch up just for a second. I know people like me to do that. I get comments about that. Facebook, Netflix, Amazon. We looked at the next couple. We looked at all of these. Tech Resources, this is my buy of the year. I talked about this when it was $4. I told you to load up the farm. I think it's time to load it up again. Why? This doesn't look that exciting, but this was $7. I told you about this stock in February. In February, this stock was less than $4. Today, this stock is 24. Look at the earnings per share coming into this stock. And in fact, and this will be the last thing I'm going to show you, this is not an aberration in HGSI. Let's just pull up MarketSmith. Close your eyes. I don't want you to see my passwords. Lots of asterisks. That's my password. Tell what I was looking at last was U.S. Steel. And here we have it. It's a new symbol now, TECK. All right, until I got to go. TECK. Look at the earnings per share growth. Earnings per share growth 200% to $4 in 2017. Do you really think a stock that has $4 of earnings and is growing 200% is going to trade for $24? No, it's going to get up to $60. I think the stock's got another double in it. I'm long, I'm proud, and I'm looking forward to seeing it move up. Of course, I'm not stupid, and I did protect myself with the pullback here, but we're forming a cup. A breakout above 2660 is a time to get back into this stock. I like tech. Earnings are out in February. Hope you all enjoy this. I do love doing these programs. I also get a kick when people come up to me when I'm at somebody else's program and thank me for doing these. If you're the person who's looking at buying my Dell XPS 13, I've sent you a couple of emails. I'm wondering if I'm in your junk box because you tell me I haven't told you how much, and I keep sending that email, so please take a look. I'll probably do this again in 2 or 3 weeks, maybe as long as the late part of February when I'm at the Traders Expo. You all have a great one, and good night.